Investors and traders, welcome to the channel Market Chart Pattern. Today is 21st of December 2023, and I hope everyone is having a great day. In this video segment, we are going to take a look at the key US tech stocks that we always do for this video segment. And this one is going to be a little short segment, and I will try to cover as many stocks as possible. But a lot of patterns that we had been watching, which we covered in the last video, remains the same actually. And I wanted to do this video and go through one of the few of the key stocks that we like to follow, such as Tesla, because of the market action that took place particularly yesterday. And if you're interested to know more about, I did a video about yesterday's price action in the US stock indices. I will put a link to that in the description and also towards the end of the video. Please do have a look at that one. And we have seen a bit of a rebound today. It was within the levels that we were watching. So this video is for educational purposes only, and it is not a financial advice. And let's start the video. So we are taking a look at the daily chart of the Tesla stock, and what we see is yesterday, which was 20th of December 2023, we saw a move lower, a close lower in the stock, and that was because overall the market, the Nasdaq stock index, Dow Jones Industrial Average, and also S&P 500, they all pulled back, and it just really happened 1.5 hours before the close of the market, and those were pretty strong. There was a pretty strong sell-off, and it's good to see the market rebound today. And what we are seeing is the Tesla stock also forming an inside bar here, but a positive bar. And from a patterns perspective, from a momentum perspective, the price is above the 20-day moving average, which is this blue line here, which is above the 200-day moving average. So the momentum also remains supportive for a higher price, and as long as our point, this point here, which is marked as D, it's in fact also a point C for a larger ABCD up. We are looking for higher price per this pattern. Should this pattern give way, so this point is broken down, we'll have to evaluate the stock in a different way, but we'll get many clues before that. For example, here we have a good structural support from these bottoms here, and previous resistance here, and if these are broken to the downside and also below the 200-day moving average, that will give us a lot of cues that something might be different. Above our analysis, we are still looking for a higher price for the stock. Let's take a look at Apple. So Apple stock going sideways, resting on a 20-day moving average. A huge support from the momentum. Look where the 200-day moving average is. It also causes a bit of a gap situation where the price could actually, in fact, pull back lower. On the upside, let me actually quickly show you the weekly chart. So this is what we're looking at, the weekly chart, and here what we see is this $200 per share level was really key because of this pattern formation. I'm not going to go into details of the pattern. And on the upside, $220 still remains on the card, but looks like the price is consolidating here and will remain like this for quite some time actually. Let's take a look at Microsoft. Oops. Here we go. So the Microsoft stock is also going sideways after having touched the $380 per share level, which was the 1.272 expansion. And here, look at the 20-day moving average. It's just kind of hovering around that level. 200-day moving average is still below. From a momentum perspective, yeah, shorter term momentum is getting weak, but the stock still remains supported because the structural support here and just kind of going sideways. Let's take a look at Shopify. Shopify stock is kind of pulling back a little bit after pretty much meeting our target. So we're looking at anywhere between $78 to $80 per share level, or it could in fact hit $82 per share as well. But this was 78 to 80 was kind of our target, which it has achieved because of the 1.272, and this one, the brown line, is the 38.2% Fibonacci retracement from the all-time highs to the recent lows, which took place a year ago. And yeah, there's a possibility the stock could actually retrace from here. Here we go. If it does a retrace, our 38.2% Fibonacci retracement will come around 66 and a half, $66.56. That's what we're looking at. But it'll have to go through the 20-day moving average before it happens to get there, and the possibility of it moving higher, $80 still remains on the cards. Let's take a quick look at Amazon. Here we go. So the Amazon stock, so the good news is that it has broken above the 61.8% retracement, and now it's just moving sideways here. But that's a key observation that it has gone above the 61.8% Fibonacci retracement, and we'll then evaluate it on a weekly basis. Let's actually take a look at Roblox. There we go. So the Roblox stock, the price action had been disappointing in the sense that the actual pattern that we were looking for this point C to hold, which did not, and it's because of the earnings and a gap lower, big gap. But look, the stock has had a really good recovery, and it is back in the top of the range now. So this is the range. Maybe on the weekly chart, I might have drawn the range. Maybe it's a little bit easier to see. So that's around the top of the range, but the possibility still remains that it might actually be able to aim for about $56 per share level, and $66 around 38.2% Fibonacci retracement. We are watching this stock, and it's just been in a sideways range for quite a long time, and it'll take some sort of a catalyst for it to be able to actually break out of it to the hopefully the upside. And we'll be watching the price action. And the other stock that we're going to take a look at is this stock, Zscaler. So I want to add this to our list, and in fact move to the weekly chart, although the week is not complete yet, but it's a holiday week, and the trading is getting lighter. This is also a bit of thing to note that because of the holidays approaching, the volume does get to tend to be lower, which could in fact have significant moves, the kind of move that we saw yesterday in the stock indices, and also that impacted some of the individual stocks as well, because of when the volume tends to be lower, the price moves could be exaggerated. And also particularly in the currency markets, towards the um, you know towards the start of the new year, that range, sometimes big moves happen, and especially in the Japanese yen, the Bank of Japan sometimes come and intervene in those markets around the first of the year, that sort of range. And it just one needs to be just careful and use stops if they are trading. And again, it's not any financial advice, just some observation. Okay, so the Zscaler. So this stock had a fantastic run after hitting lows in March of 2020. From being about $35, it ran up to $375. So an amazing run. And maybe you can see five waves there for people who follow Elliott wave. And then it also had a fantastic move lower as well. Kind of reminds me of Meta, Facebook. And here it reached about $100. In fact, it went lower, or $20 lower, below the 78.6% Fibonacci retracement of these lows back in here after its IPO days to the all-time highs. And then what has happened is it had a nice gap on a weekly basis. Look at that on the 8th of May. I wish I was actually looking at this stock much earlier. And it has what it has done is it has actually moved above convincingly on weekly closing basis, above the 38.2% Fibonacci retracement, which came around $195 per share. That's amazing news, and that's why we also like the stock. However, where it is trading right at the moment, we have the 50% retracement and also the 1.27 to expansion of this range of this one. Let me actually draw it like like this. So it could be a pretty good resistance here. And by resistance, I mean that, we could actually face some pullback in the stock, which would be actually quite healthy as well. And just moving to the lower time frame, it might actually pull back, maybe right into the 200-day moving average, or in that range. We'll have to wait and see, which would be actually um, quite good from if someone is looking to get into the stock, for example. Again, not a financial advice, just saying that the pullback might be happening, and if this resistance is just blown away, then the stock is much stronger. So another stock to will be following moving forward. Let's quickly take a look at the Nvidia. Here we go. Again, it's right in the trading range, and it touched the top of the range here, and now kind of hovering around that. What is the other? Yes, so let's take a look at the Coinbase. Um, so really interesting. The pattern that we were watching in Coinbase was around this 38.2% Fibonacci retracement coming in around this blue line. And what we have actually seen the stock do is move above that. So that's good, that's positive. And also this ABCD 1 price projection that we're looking at. So let's see if it is able to hold above that for a few more trading days. And while we are taking a look at this, let's take a look at BitO, which is the ETF. It's the ProShare Bitcoin Strategy ETF. And here, slightly different pattern in this ETF compared to the Coinbase. 38.2% Fibonacci retracement comes in around 2271, and the 1-to-1 price projection ABCD is pretty much where the price is. And in fact, after hitting that, the price had actually moved closer to the 20-day moving average. Now it's kind of moved up here. I can see another 1-to-1 ABCD right here. So watching this one, and if there is a pullback, maybe it could pull back right to this 38.2% Fibonacci retracement around 1860. We'll have to wait and see. So thank you very much for watching the video. And if you like how we do the analysis using pattern recognition and Fibonacci retracements, expansions, projections, and extensions, please do subscribe to the channel. And if you do, then hit that bell icon button. That way you will know when the new videos are posted. Thank you very much. Good luck and good trading.